Yo, what's good? Make sure we got everything running. What's good, Kimmy? Yeah, let's just make sure we got everything running. Okay, cool. What's good? Let me move this down. It's too high. There we go. What is good? Pretty much today, man, it feels so awkward. I haven't been doing this for like 2 weeks. Um, what's good, y'all? Today I'm gonna be just really breaking down, kind of refining your system, what that means. So obviously, you want to run the numbers, but there's also some psychological shifts that I think people can start using for their entries. I think people can start using for more consistent based trading. Obviously, if you're not a trader that has withdrawals or has consistent withdrawals, your goal is to obviously work towards that. It's not just the get a payout for 1 month and then you go like 8 months without another payout. That's not really, it's not the move. Obviously, as a trader, you have to understand, is this going to be side income for you, or is this going to be your main stream of income? Because a lot of people, they're definitely okay with, just making some money on the side. Smaller live accounts, maybe one funded account, that's fine with them. But for me, and I think a lot of other people, they really want to fully have that freedom and independence, and really only trading is one of the things that grants you that. So I'm gonna really just break down really what it means to refine your entries and run the numbers. And there's also a specific quote that I think everyone should write down that I really have been living by in my trading. And there's a thing that you can do for every trading session. So let me know in the chat. Does anyone like understand what they're doing in back testing? They understand exactly where their entry should be, exactly where their target should be when they're back testing something or they're looking back in the past. But when it comes down to live markets, they don't really know how to see it, and they also don't know how to react if they take a loss. I think a lot of people in trading, once they take that first L for the day, they just either go ballistic, meaning they're just trying to get that win right back, or they're completely scared for the rest of the week to even trade their system. And as a trader, there's something you guys should write down. This is a quote that I currently have been living by and continue will to live by. Is or it's not like a life quote, but it's kind of like a principle. It's, if I were to lose this trade, how shocked would I be? And if it's not anything less than unbelievably shocked or completely surprised, I should not be taking the trade. So if the trade is not like an A plus setup, it does not absolutely make sense to you, you should not be taking the trade. Like, it should be a trade that you should know you probably have little to no reasoning to lose it. Obviously, you're not going to win every single trade in the markets. I'm not saying you're going to be 100% profitable. You're going to be 100% win rate as a trader. I'm not. No one is. But you can eliminate so many L's as a trader if you just live by, okay, if I were to lose this trade, right? If I were to lose the trade, how shocked would I be if this trade lost? Like, if it's not anything less than unbelievably shocked, I should not be taking the trade. Pretty much just meaning, like, is your setup there? Is your confirmations there? Does it make sense with the market structure? Does it make sense with the narrative of what's happening for the day in the market? But if it doesn't, and you're in a trade that it's kind of a gamble, or you're in a trade that's like, it could play out the other way, then don't take it. I don't want to be in any trades where it's like, it could go the other way. That doesn't make me confident as a trader. That doesn't make me confident. I already I took my dub for the day. This was where I would have took my actual short if we didn't get that easy play at the open. Why? We're getting delivered from this 4-hour trap candle. We have a fair value gap that was rejected on the 2-hour based on the fair value gap getting tapped in. So what is it that I like to see? I like to see an inverse fair value gap most times out of 10. You see you have an inverse fair value gap. You obviously see you have this engulfing candle with engulfing volume making a trap candle right here. But I have to validate this with an inverse fair value gap. I can't just only take this unless it's like completely in momentum and the target makes absolute sense. Then sure, but I like to see price engulf also close through a bullish gap because this is a bullish gap, right? Which makes this an inverse. If price disrespects a bullish gap and is respecting bearish gaps, because this is a bearish gap, you see this big red gap, we barely tapped into it and ran, I would be looking for shorts. I would be entered here, stop goes at the high, and I am targeting, you can either do a fixed RR, you can do a 1.5, you can do a 2, you can do a 3 even if you want, right? Or you can go variable based. For me, I would have taken out at this fair value gap right here. I would not be comfortable with the market at this fair value gap based on the fact that we had this candle that swept. We have some wicks. I know we have some wicks that we can obviously, still hunt and, continue lower on. But for me, I like targeting fair value gaps because I know a lot of times fair value gaps can give a valid entry to go back, and I don't want to have any break evens too often. Like for me, my break even point would be pretty much as soon as we start tapping into this trap candle right here, because I would want to see this close just to the gap. You can see that price is now giving a rejection at the fair value gap. So for me, that was an A+ setup, A+ setup short. But for the play that I took, for my continuation model that I went over pretty much the last call, I like to look at fair value gaps, right? I like to see fair value gaps. I want to see rejections based off fair value gaps. If the price is obviously short, you could see that we were short pretty much since London. And New York was also bearish. It was bearish pretty much the whole day. It just kept going and kept going and kept going. So I like to see fair value gap get tested and respected to go lower. You can see this extremely hard rejection that we had. I pretty much entered strictly because we had right here, as soon as this candle started pulling below this low, we had something called a change in the state of delivery, meaning price is now wanting to pull lower based on the structures of the bodies, making a lower high, lower low. Pretty much as soon as we got this retest of this order block, I was pretty much in. And also, I pretty much only entered as well because we had this fair value gap get respected. I was pretty much entered at this fair value gap a little bit above it because we had crazy wicks at the open. Very nice play. You can see that we have this huge gap, which is also a fair value gap, gets disrespected. So I was like, all right, cool. What are we looking for? You guys know that my targets are fair value gaps, sell side liquidity, or as a session. We have a session here. We have New York low. Look what happens after we take New York low. We reverse. I don't know how many times I need to say that on calls for people to start understanding that sessions will determine a lot of the highs and lows of the market for the session. It really will. Obviously, I'm not saying that the gold just can't come back down here, but it's less likely, right? Again, that's why my short would have been less than a 1 to 3 RR because I'm not expecting this whole thing to come melting back down. Can it? For sure. It can. But I want to play as a trader. I want to play on favorable odds. Whatever has the highest odds in my favor, I want to be in. Again, whatever has the highest odds, because as a trader, we play by variables. We want the highest variables on our side of the board to be entered into trades. We don't want to be taking trades that feel like a gamble that, oh, you just because you see, what's it called? Just because you see a trap candle, you're just going to enter just to enter. Like you need more structure with it, right? You need to understand really where you're at in the market and start, comparing it to other trades you've taken, start comparing it to where you are in the range, because where you are in the range matters a lot. Like for me, even if this session wasn't here, I'm not targeting much more than this because my target in general has always been buy or sell side liquidity. I don't need a 1 to 40. That's not my, that's not my R to R that I think will make me a profitable trader. That would decrease my win rate severely if I was just focused on 1 to 40s. as a trader, you're not focused on these insanely big moves. You're focused on things that are consistent, especially if you're a funded account trader. You're focused on pretty much staying above. This is your, imagine my right hand right here is your max loss limit or your daily loss limit. Your goal is just to stay just above it, just to keep staying above it, keep staying above it. That is your goal. Your goal is to be winning consistently versus you lose 4 times, but you got a big trade in return. That's cool, but your psychology is going to get absolutely cooked. That is not your goal as a trader. So focus on what is actually consistent, right? Do the numbers. Please journal. Like I journaled my trade today. I journaled some losses. I will be journaling, right? And actually something I've started to do, which honestly has been a big breakthrough for me, and I think everyone should start utilizing it, is literally record yourself trading. Meaning, I'm not saying you have to upload it and send it to Instagram, like, oh, I hit my trade for the day. No. Record your habits. Like, literally get it on a Zoom and record to your computer, or do something. Do some form of recording software where you can see yourself literally trading. How are your emotions? Keep your mic unmuted. I have my mic unmuted. Am I crashing out? Am I freaking out? Am I paranoid? You gotta understand and be able to it's like a lab experiment. Think of yourself as your own experiment. You want to see, okay, even on the recording, was the trade that I took good? Were my emotions in check? Did I let my target play out? Say you had, I'd start doing break-even points at inner lows and inner highs. Did I follow my break-even bias? Did I follow that? Right? Because your goal as a trader is to follow your rules. And I've been recording myself to my computer in my trading sessions, especially today. I feel more calm than ever as a trader when I'm recording myself, because I also know psychologically how stupid I would sound watching myself back, freaking out. And obviously nowadays, I'm not breaking things, or I've never been the type to start breaking stuff over trading. I know literally some people that break stuff over trading, which is crazy. But I've never been to oh my gosh, it's the end of the world, on any loss. But if that is you, start recording yourself. And you'll literally watch yourself back and you'll be like, wow, I sound like an idiot. And if that's you, then that's just an easier way to start critiquing yourself. That is an easier way for you to start looking at yourself like, okay, cool. I'm acting stupid. I'm becoming stupid based on my emotions. I need to start chilling. I need to start taking things back. I need to start getting better. So that's something you can do. Wow. Naz just wanted to rip, huh? Yikers. This joint ripped. That would do it. Price taps into this 30-minute trap candle, absolutely delivers higher. You can enter off of an IFVG. So basically on the candle of the closing of this candle. Or you can do pretty much, you just target the lower 50% of the trap candle, and then you enter like this. I mean, pretty much you're getting the same R to R in general. But damn, I wanted price to pull a little bit lower to this lower trap candle based on the 1 hour, because this is a 4-hour zone. But in general, it's giving a very strong reaction. I still think this candle could close and continue lower, because I do not like that we have, let me go on regular feed so it's cleaner for you guys. I don't like that we have a lot of this unprotected low as well. We have another low here as well. I don't like this range that we're in. This is a very gross range where I think we would just continue to dump, and as soon as we start taking some of these external lows, then maybe NAS will give a correction. But I hate the area that we're in on NAS. That's why also, a lot of people have noticed or said yo, why aren't you trading Asian or New York right now? New York has been absolutely terrible. The price action, just every day I look at it, I'm like, wow, I'm glad I didn't trade that. It's just bad price action. It's not every day is terrible, but Asian's been a lot smoother as of late, in my opinion. I think Asian's been a lot smoother. Though there was a really good trade today. Where was it? These were just markups. This was the really good trade today. Where you have a trap candle. Obviously, you can see price as an engulfing candle, engulfing volume. You're not looking for price to come back above this. This is going to really set in stone a lower high for price to start falling below. And I'm looking, obviously, for what? An inversion. You can see we have a bearish fair value gap, or you can just call it an inverse fair value gap, where price slams right below it. Price slammed through it on the 2-minute. It was a 2-minute gap. As soon as price slams below it on the 2-minute, I would be entered. So it probably would have entered me around right here, just based on the overall movement of the candle. You could target a 1 to 2. I mean, if you just targeted a 1 to 1, it would have took you a minute and a half, maybe 2 minutes. Obviously, whatever the R to R works for you in your analysis, go for it. Focus on your analysis. Focus on what you need to be targeting. You could have obviously, I mean, for me, I wouldn't have held this longer than a 1 to 2, just based on the fact that this is the low that I'm looking to have taken out, right? This would be my sell side liquidity. I don't know what this line is for. This sell side liquidity. I'm not looking for this to go, like, look, if I was targeting a 1 to 3, I'm expecting this much more movement below the sell side. I don't need that. So 1 to 2, that works. But yeah, there was a lot of plays today. Again, once you see this engulfing candle slam, the lower high is probably going to be intact. Price fails to even retest the trap candle. It just dumps after that. Yeah, it's lower high is intact. Retesting the trap candle works lower. This was such a good buy, dude. This was nasty. And people would have been like, well, why would you have entered that on the 2-minute? Because I want to see the 1-minute closure. The 1-minute gave me the full closure. Would I rather have my entry be here? Or would I rather have my entry have to be here based on the full candle closing? No one's risking this, bro. This wacky ass R to R. I'm not risking that. No one's risking that. You have to go based on the lowest time frame fair value gap that makes sense. I don't have the fully upgraded. I'm gonna get it soon. I need to get it. Where you can get the 30-second chart. I need to get that 30-second chart because I can guarantee you there was probably a better one down here that you would have already had an easier R to R in general. But yeah, a lot of your targets should be fair value gaps, or your entry targets or entry areas should be around trap candles or fair value gaps. If you're going based on fair value gaps, a good example would be, let's find a fair value gap. Here, you have a fair value gap. If you're looking for a continuation, you got a bearish fair value gap. I mean, you have an easy entry right here. 1-minute trap candle, price is going to deliver lower. That could be your entry. I would have, if I'm targeting specifically this fair value gap, I would have just took the trap candle. But I don't like my setups looking too different all the time. I'm only looking for either engulfings with trap candles or I'm looking for inverse fair value gaps. Those are the only two type of plays I will allow. However, I do prefer the fair value gaps more, just because I know in my mind that has such a higher probability of playing out, especially because obviously this is a bearish gap. If a bearish gap gets disrespected, that means price will most likely continue higher. That's just, that's market movement, right? You got to look at which fair value gaps are getting respected. I talked about this last call, I'm pretty sure. I talked about your daily bias. So meaning, what's the trend? Obviously, you'll go to a higher time frame, look for where your trend is. Identify, I need to make this smaller so everyone can see. That didn't help me at all. Let's go like this. Wow, I could have put that in an easier sentence. But Identify where price is delivering, meaning from buy side liquidity or sell side liquidity. If you don't know what an SMT is, it's pretty much when ES takes a low or doesn't take a low. It lets you know that Nasdaq's going to have a stronger move than ES. You can obviously look that up. I don't need to explain that right now. But determine which fair value gaps, this is the most important part, are getting respected and disrespected. This confirms your direction. If it's bullish and bearish fair value gaps are getting disrespected, while bullish fair value gaps are getting respected, that's going to continue higher. Vice versa if it sells. So if bearish fair value gaps, right, bearish, if it's bullish fair value gaps are getting disrespected, while bearish fair value gaps are getting respected, it's going lower. So see the lowest time frame fair value gap to be respected. So if you see, this blew my mind. I was back testing this. So if I see a lower time frame fair value gap being respected over a higher time frame fair value gap, your bias is most likely right. So what does that mean? If I see, for example, let's look for a good example. So if I see a lower, right? If I see a lower time frame fair value gap being respected over a higher time frame fair value gap, my bias is more likely right. Perfect example was on this almost PM session. Yes, it was almost noon. You can see that we have this fair value gap. Where is it? Right here. This was based on the 5-minute fair value gap. If you see that the 5-minute is getting respected, but you see the 15-minute being disrespected, meaning while you're in your setup, you're actively seeing this trade, like this candle close through, your bias is in the right direction. Obviously with structure, you're not looking for buys here, right? This was after the obvious FOMC dump that we had. You're not looking for buys anywhere in here. You know, today you had no opportunities to be buying, and you should not have been looking for buys in general. Just follow the trend. Like, it's so simple. I think a lot of people want to try to be like the hero and catch a falling knife. I'm not the hero. I will gladly accept not being the hero. You know, I will never think I'm the hero. If you see this happen, price clean close above this, you should probably be looking for buys of some form. You can see that I didn't take this sell. I had it marked out. This candle rejected the structure break here. That's a valid sell. MSSS is market structure shift, meaning you're obviously looking from bear to buy. Once you see this full clean close above, right? Full clean close. Now you can start looking for, okay, where can I target for a valid entry? Do you see any valid entries? We have this market right here, or not market, this area right here sweeping previous base liquidity. We tap into a 3-minute trap candle with a 1-minute IFVG. I'm free to buy here. I would have been bought here. Price closed above. Stop goes at the low. I would probably target a 1 to 2. Because I understand based on my, my data, I don't need to be targeting high moves. If I'm actually taking my time and I'm using my brain cells and I'm not trying to be like, oh, I know everything, my bias, I'm going to marry it. If I'm just looking at this like objectively, yeah, I'm completely fine with taking this as a 1 to 2 based from my data. So easy. You're pretty much just taking this. This is your buy side liquidity. Not the overall buy side liquidity because this would be up here and up here. But this is just inner range buy side liquidity. You can see after it takes it, it just chops, 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 chops. That would have been an entry. I wouldn't have entered here. There was not a big enough gap for me. Yeah, it's too much of a small gap. But, I mean, even if you did, you entered here, still would have played out, but I don't like it. I need to see it with a confirmation of a trap candle or something, or a fair value gap. We have a trap candle obviously here, so that would have been a-okay. This obviously up here was the better setup, just because we came back, touch this 15-minute trap candle, which was also a 30-minute base trap candle. And we had a very clean close on this candle. You're not risking a lot here by putting your stop here. You're not risking too much. I mean, even then, you're almost at a 1 to 2. It's pretty clean to me. It's a pretty clean setup. Copy and paste on the chat. The daily bias, I can put that in the chat. This hit, I believe so. I can use a little improvement in live trading. You know what? If there's something that you want to do based on live trading, is like I said, just record yourself. Record yourself when you're about to go in live, right? Understand what's going on, how you could have improved your emotions, how you could have improved your entry, how you could have improved your exit. You got to look at it as like a film study, right? Like, I think everyone knows that athletes do film studies. If you're an NBA player, you're watching film, you're watching, you know, what play went really well against a certain team, blah, 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 stuff like that. And treat trading like a professional sport, because it is a professional. I think a lot of people, dude, they become traders just because they don't want to work the 9 to 5, and they just live based on the TikTok mentality of like, oh, I'm better than you, and trading's so easy and simple. Like, bro, trading is a professional high income skill that you can actually learn. Again, there's a lot of LARPers, bro. There's a lot of these mentors that don't even trade because they don't want to. They just would rather sell the mentorship because they know it's going to sell. But I would rather sell something knowing that I'm profitable. I would never sell something if I was not profitable, right? So if you want to eventually lead people, I think you should probably want to become someone that's profitable, someone that's really doing it. I think that's, for me, that's my principle I live off of. If I'm not fully doing something properly, I don't feel capable of leading other people. So you said, so when there is a fair value gap, you don't wait for it to come back to the zone. You buy as soon as it closes above, below. Yeah. I buy as soon as it becomes above, because this is just a momentum. It's momentum-based trading. Inverse fair value gaps are based on momentum, meaning price, obviously, you can see higher high, higher low, higher high, higher low. This just came down right here. You can see this just came down to sweep this liquidity, this little consolidation pool right here. You have the inverse. I buy as soon as it closes above. Once it, or you could literally just place a limit. You could place a limit right above this if you want, and it'll just get you in, boom, and then, you know, you'll be buy up. But yeah, that was the best play I think you could have took this morning, in my opinion, or at least what I would have taken would have been this inverse for value gap entry on the 2-minute. Super clean, super nice. You have this little change in the state of delivery here to continue lower. My break-even point would have been, honestly, as soon as the change of state of delivery gets placed. So right here, I would have went break-even here, and then price dumped to the 1 to 2. I would not be answering anything in this. That's why I have it X'd out. It's just choppy, choppy, choppy. Nothing I like here. Nothing I like here. I want to see it when it's full trending. Once I see that this engulfing candle is in place, and I see that like this fair value gap, by the way, this fair value gap got absolutely obliterated. This slammed through. I'm now gonna be looking for a more probable setup versus just like, oh, this is all chopping, let's just try to find something. Like, no, I'm not trying to do that. Like for here, at the top, let's go up to the top. You can see, no, this would have been in the PMs. I would not be up trading that. I wouldn't have caught that anyways. No way. I wouldn't have caught that. So entry model is when for value gap. Wait, what? I just yawned so my eyes water. I can barely read. So entry model is when fair value gap is in another fair value gap, or when there is a sweep of a session. Well, sweep of a session is based on placing the lower high, or you can find an entry. But like, look what happened here. New York took, or Tokyo took New York low, price completely reversed. I mean, that's how you catch the bottom. If your goal is to catch the bottom of something, that's what you're really using sessions for. Sessions isn't my only entry. It's just based on, you know, what structure makes sense. But yeah, if you want to just find the low, I mean, if you want to just trade this low, you could have just did this engulfing candle. I think that volume's engulfing. It's literally the exact same volume. But engulfing candle, I mean, if you wanted a 1-to-1, that'd be your easiest 1-to-1 of all time, just based on the sweep. You could have just caught that. Was looking at silver sells around 79, 78. I haven't traded silver in a minute, bro. 79, 78. 79, 78. I like this. Maybe taps up to this trap candle and dumps again. But ooh. This is what you're referring to? It's a nice little trapezy. Price comes up, sweeps the New York high, then maybe dumps again based on the trap candle. I see that we also have. Do we have anything else in here? We have a fair value gap. Yeah, I can see this. If it price wants to come take out this high and tap into this trap candle again, I could see it continuing lower. What did silver do anything this session? Let's see if we can see what silver did. Ooh, that would have made me mad if I was a silver trader. We leave behind the New York low. That would have made me so mad. Because, like, yeah, you can see this candle engulfs up. It would tap into this trap candle and just continue higher. But I like seeing session sweep, man. You know, it makes me happy. Yeah, and then it just came back for this for value gap. Engulfed up. Yeah, you would buy here once it engulfs back up. And then you would have caught this whole move if you wanted. That would have made me mad, though. Not seeing that get swept all the way through. Does anyone trade Forex, like futures Forex pairs? Sometimes they're clean, bro, but most of the time they're not. A lot of the time they're just not clean. They're just ugly, but I mean, the candles just print so ugly because there's barely any liquidity in it. They just, ugh. I just don't like how they print. The only one that prints cleanly is usually Euro, because most people trade the Euro in futures. But ew, this whole joint is ugly. I wouldn't have wanted to even be in this market. Yeah, I'm good on that. I'll stick to my end of season gold. A good potential Nas sell would be up here again at this trap candle. Only problem is they could just deliver on this one and then just ruin the whole motion up here, but I think this would be a decent area to look for maybe a 1-to-1, 1-to-2, because I do think that this bottom could be intact maybe for the rest of the session. But we have a fair value gap up here. I'd rather see come hit. So either this area or this area up here. I'd be fine with either. Again, I'm not a trader that looks for really areas that happened like mad long ago. And I mean by that is like a lot of people like you gotta understand that like futures trading is different than forex. Like forex trading is a lot of like you mark out 1 hour, 4 hour zones, and you're specifically just waiting for those specific areas. I'm looking for like 15-minute key levels, 5-minute key levels, you know, maybe 30-minute key levels sometimes of areas that I just want to see price deliver from. Like you can see that you have this fair value gap. Look, not even a body closes through it. It just kept wicking through it. And then I would then go on a lower time frame and try to find the play that makes sense to me. I would have already took this setup. Again, this is the setup I had out. None of the other stuff in this session for this area made sense to me. There wasn't any clean closes anyway. Yeah, this is a terrible. This is too big of an inverse for me. No, actually, I would have took this. I would have been a-okay with that. I would have been fine with that. It's just ugly, but I would have been fine with it. But I like the setup here, just based on how aggressive this 2-minute dump was. I know you only go for 1-1 or 1-2. Do you see yourself looking for? I don't only go for 1-1. I go for 1-1. Well, if there's certain accounts where you need to have consistency every single day. So on the accounts where you have to have consistency, meaning like 20 or 30%, I'm looking for usually like a 1 to 1.5, maybe even less, somewhere in that ballpark, because obviously you're judged off consistency. You can't just go take a 1 to 20 and then go for like a 1 to 2 next day. Well, then your consistency is all screwed up. But like, yeah, if I have a live account, or when I get a live account, when I have a live account, I would, I'd hold the whole trade differently. If I caught this setup on my live account, I would have just kept holding this, because I'm looking at levels like, okay, cool. We have this obvious trendline liquidity. We have going higher time frames. We have this whole fair value gap. This is, gaps are like this, or a fair value gap. We didn't even close through it. You could have just really held this, to this fair value gap. So that's what I would have rather have held if I had a live account, but I currently am not using one until like I have enough of a certain capital. I have a certain capital kind of state of mind or target that I'd like to have for the live account, and then I would do both. I wouldn't just only do a live account. I would be doing both, because funded accounts are like your what's it called? People are like, they say like it's not like daily cash reserve, but funded accounts can be daily cash reserves. Like you can withdraw those very consistently, versus like a live account. I'd rather build that as my net worth. When you say forex versus futures is different when looking at time frames over the 50-minute, would that be in the same sentence as future prop firms or live account futures? Yeah, I would still be trading. I'd be trading a live account futures like forex. Obviously, this is the feeds print differently. Like you have major gaps that leave more on futures. Sometimes prices at different intervals on futures. It could be lower, it could be higher than forex. But say like, yeah, I'm trading on a live account. Say if I was in this setup, I would still be holding this on a live account, right? I would be targeting, this fair value gap. Say this closes through and we continue higher. Well, then I would now be targeting this trap candle, right? Based on a live account futures, I would be holding my trades differently. But the fact that in most prop firms besides Top Step, you're judged on consistency, I don't want to be holding my trades for that long. And I don't need to be looking for these very big, crazy high time frame zones, because I'm trying to find a consistent pattern where I can, trade 5 out of 5 times in a week, or I can trade 3 out of 5 times in a week, right? If you want to start scaling those payouts, you want to start scaling those accounts. Your goal is to, in prop firm futures, right, is to just look for, okay, where is my target? Okay, cool. Say I see my target for the day. I get out. Boom. That's all I need. I don't need the big move. But if it was a live account is building your net worth. It's not your cash reserve, or it's not your cash cow, like the money you make every day. There's firms where once you get to the live account, you can withdraw every day, right? So you can make money every single day, withdraw every single day, just keep going, just keep going, just keep going, just going. But say, right? So let's just say I was trading live futures and I had a setup from up here. I know that
we had this engulfing candle, then engulfing volume. Price is not very likely to break back above this. I could put my stop here and just let this whole move eat, right? I can take out this buy side liquidity or sell side liquidity right here, right? I'd let this whole move eat. But the fact that, you know, I'm in, if I'm on prop firms, I don't need the whole move. It just doesn't make sense. What's the highest time frame you stay in after finding your bias or AOIs on higher time frames? Probably the 15-minute or like the 5. But if it's like, say there's like no volatility and it is a bigger move, sometimes I'll just look at the 1. For example, say I take a setup like this, we have engulfing, and I'm just looking for maybe my 1 to 1.5, 1 to 2.5, 1 to 3, whatever it is. Yeah, I'll just look at this time frame. But for me, I don't get too psyched out by time frames anymore, where it's like I can't. Oh, look, this little fair value gap played out perfectly. See, that's why you target fair value gaps, man. You never know. But yeah, pretty much I don't get too phased anymore by looking at time frames where it's like, oh, I see so many candles printing, I need to get out. One scary big 1-minute candle's terrifying me. I don't really get too dazed by that anymore. Maybe when I was new, but for me, I just, whatever time frame my obvious zone was off of, and whatever my inverse for value gap was based off of, is probably the time frame I'm going to stay on. So like this would be a 1-minute inverse with obvious engulfing candle, the engulfing volume. Stop goes above the engulfing candle. Well then, yeah, would be the setup I would be basically taking. Why the 8-minute time frame? I forgot what video I was watching, but I don't know the title of the video. But there was like a cool, no, it was a Valentino live stream where Valentino has like the 8-minute or whatever, and it's for like sometimes like it has cleaner fair value gaps. Honestly, I don't have too much of an explanation of why I have an 8-minute time frame marked out. It's not like some special genie. It's just kind of in the middle of like, I mean, it's not fully in the middle of the 5 and the 15, but the 10 would be the obvious middle time frame. I just use it sometimes because I like, from back testing, I've seen a lot of inverses have played out on the 8-minute at like the top of ranges. Like for here, it played out on the 8-minute. For here, played on the 8-minute. For here, played on the 8-minute. For here, played on the 8-minute. So like, just at a lot of the top and bottoms of the ranges, it plays it out pretty well. So I don't really have too much of an explanation for that. It's just kind of, it's just kind of how it is. Multiples of 4, something like that. Yeah, wow, this for value gap smacked. He had it too at one point, Valentino did. Yeah, then that's the video I found it from, because I wouldn't be looking for an 8-minute time frame from any other educator or anyone else other than Iffy. Iffy would be the type of guy to have an 8-minute. So that makes a lot of sense, actually. Yeah. So if you want to start, when you're in live trading, if you want to start evaluating, your emotions or your psychology or other things, start literally live streaming yourself. Like, not uploading it to YouTube, putting it out publicly. Like, go on Zoom, record to your computer, and watch yourself in the trades. Like, have your face cam on, have your mic on, watch yourself in the trades, hear your thought process out loud. Because for me, I talk outside of my mouth a lot. Like, I talk out loud a lot, even to myself. Like, obviously, I'll do both. Like, I can obviously use my brain and think to my brain, but sometimes, like, I want to, like, I want to treat trading like a profession, because it is a profession. So I'll talk out loud to myself while I'm in a setup. Kind of just remind myself, like, hey, this is our target. Cool. This is what, how many points we're trying to go for, how many points we're risking. Cool. And then, I'll pretty much watch myself, watch my habits. Was I like more emotional than I usually am? Was I impatient? Did I not let my setup fully run? Did I break even too quickly at the point of where I said I was going to break even? Stuff like that. So that can definitely help you quite a bit. What can also help you is obviously journaling. Like I know Neri is the biggest preacher on journaling your trades, and I think it's one of the most important things you can take away. It's like think about like a setup that has like a 1 to 100 risk to reward, and it hits about 90 to 100% of the time. Like that's pretty much what journaling is. It's pretty much always guaranteed to help you get better. Like it is guaranteed to help you get better when it comes to journaling. Because if you're literally getting cooked and you have no idea why you're getting cooked, say you lost 4 times this week and you didn't document a single one of them, but then you don't even know why you're getting cooked. You're just gonna say you're getting cooked, right? You have to actually sit down and be like, okay, cool, man, this was a really bad entry. There, this was this, and this, or blah blah blah, or there was this thing that I could have targeted better, or whatever it is, man. That's really just what it comes down to. Man, that's kind of salty. I didn't get it. Well, I don't need to take this. I already got my win for the day, but this would have been my A+, where I'll just like go eat and just be a jolly boy for the rest of the night, you know? Maybe it's just me, but when you get that A+ setup and you just follow your rules every single time with that A+ setup, you're just so jolly. Like it's not even the money, it's just the process, bro. I don't even care about, the money is just the outcome. It's the byproduct of you following your journey in your own system. YouTube bootcamp win. I could make a bootcamp. I know I've said it and teased it before, but I kind of did the psychology and stuff before, so that was kind of like a own mini bootcamp. Um, I'm trying to think of what I would go with bootcamp over, because I pretty much every call I already go over entries, good exit points, good areas to be targeting, like trap candles or for value gaps for continuations or reversals, stuff like that. I'm trying to think of like good boot camp I could do. Um, what would be good boot camp material? I mean, I guess it would just be the process kind of divvied up in a bunch of different ways. Like I can talk about like for value gaps and inverse for value gaps, and I can talk about liquidity in one point, and I can talk about sessions in one point. But I feel like I already kind of do that all in one call, so I don't know if a boot camp's really worth, you know. Just hold my phone, dog. Dude, you'd be surprised how many DMs I actually get like that. Oh, if you just trade my account, I'll give you a percentage. Bro, I don't need your money, bro. Like I'll get DM'd like, "Yo, does this really work?" No, I'm just LARPing. I sell no mentorship, I sell no course. I'm just posting for free, just for fun. I'm not even trading. I'm just not making money. I'm just doing it for fun. Like, bro, when you're a trader, you just get asked the most insane questions. It's kind of insane. Actual degens, I'm one. You got a little degen in you, Kevin, but I think a lot of us have a lot of degen in us as well. I talk to myself out loud but not about trading. I will try. Live trading bootcamp. I could do a live trading bootcamp. Then again, I should probably edit a little bit out because I'm kind of brain dead when it comes to like. I'll just do something goofy, and I don't think everyone needs to see the goofy stuff all the time. But I could do a live trading bootcamp. Only reason why I don't just like people be like, oh, why don't you just go live in New York? I mean, I want to, have some peace of mind. Always, like, I'm not stressing if I lose a trade in front of people. Like, if I lose a trade, cool, I lose a trade. But trading is a solo journey. It's a one man journey. I don't believe in depending on other people. Obviously, like, yes, I will watch live sessions. I'll watch Mike Nav or I'll watch someone else of something. Say like, I want to learn this from someone, or I want to learn like Jordan Morgan's a good example of learning like overall macro. Where's the market moving? Like I'll watch Jordan Morgan for the more macro side, but I don't obviously you can get people paid, but I don't believe in when it comes to trading is like you're letting people just hold your hand and you're getting everyone paid and they're not even trying to learn the skill set for themselves. Like yes, go get people paid. If you want to go get people paid, go get them paid, bro. Like there's nothing wrong with that. But I'm saying say this group were to magically fall apart one day and none of us were to like be in connections or to be talking to each other like that, I don't see a reason why you shouldn't want to become independent in the skill set. Damn. This is like the exact entry I talked about on my call. Mitigation of a trap candle. Price closes through an inverse. I mean, it doesn't have to fully play out, but I wouldn't. I mean, I'm still looking for buys, but this wasn't bad. I would have probably entered up here, though. But, oh yeah, I would have entered up here for sure. Yeah, this little 3-minute baby candle, I would have entered up here. We're in the same state, Jack. I'd find you if we lost contact. You don't even know where I live, bro. That's not an invitation for you to try to find out where I live, by the way. I'm just saying you don't know where I live. But I am saying if, say, the group fell apart, right? If the group were all to fall apart, your goal should not be to try to depend on other people to get you paid. Your goal should be to sit down, try to figure it out. And that's your goal, man. Like, everyone should be an independent trader. Your whole goal, wait, time out. Your whole goal of being a trader is to have location freedom and time freedom, and you're depending on other people to get you paid. So, think about this. Say someone's getting you paid a lot. You're waiting for them to go live for you to make your money as a grown man or woman for another grown man or woman to do the job that you're supposed to be doing. I don't know. I don't know. I don't know if it's ego, but I that sounds like, you're kind of like a cuck. Like you can't even do your own job. You're letting someone else do the job for you. Like it's kind of, you know, that should never be you as a trader. Your goal should not be to wait on other people to get you paid. That's kind of whack. A big psychological thing for me is once I enter a trade, I am also completely fine if it does fail and losing that trade. That's the big. I mean, that's the best thing you can have as a trader is that peace of mind of, okay, cool. Well, obviously you don't want to get in a setup if it's just like, oh, if it loses, cool. I don't care at all. I'll just lose. If, like I said in that quote, if you take a setup, if you were to lose that setup, would you be insanely surprised? Like, would you be completely surprised if that lost? Like, if you're anything less than, oh, I'm completely shocked that this didn't play out, then you shouldn't be taking the setup. Like, for this is an A plus setup. Delivery based off of a 15-minute fair value gap, swept look previous base liquidity, full inverse on the 1 minute. This is a setup where I would have been absolutely shocked if this lost. This is a setup I can take. This setup, I would have also been shocked if it lost. Because we got this candle to the CISD. I entered off the rebalance of the fair value gap. We have this overall gap to close, and we have the session, and we have sell side liquidity at the session. We have so many confirmations there. So yes, I would have been shocked if this lost. Those are the setups that you want to take. Take the setups where if you're gonna be shocked, that's a good thing. Those are the setups you should be in. If here's the setup where you're like, I could see it playing out the other way, then you shouldn't be in it. And I'm not saying like have the perspective of, oh, I'm gonna be right, bro. I'm smarter than the market. I'm gonna be right, bro. Like, no. Have the mindset of I'm following my rules. I'm following the exact things that I want in the setup. And if it doesn't play out, then, that's cooked. I just got cooked. It was one of those rare occasions or rare setups where it's like it should have actually played out and it didn't. And, that's okay. But I hope a lot of people took some value out of this call. I know a lot of people I had a decent amount of text. They're like, bro, when are you gonna come back? Hurry up, bro. I need you back next week. I'm like, bro. I had, sometimes you got to do your own thing, man. Take care of yourself as well. But had a good trading day. I hope everyone had a good trading day. If you didn't, make sure you journal it, you back test it. Why did your setup not play out? And then focus positive energy into tomorrow. Looking forward to tomorrow, trading tomorrow. Start thinking like a professional and start trying to think like, what would big money do right now? Like if I know hundreds and thousands of people would be in this setup, it's probably not the best idea to be in this setup because big money likes to hunt setups where everybody's in, right? So think like the 1%, trade like a professional, meaning like you think like a professional, you don't get startled, you're patient, you're calm, you're doing your thing. I appreciate y'all for hopping on. Um, I'm gonna try to find out what topic I'm gonna do for next week because I don't want it to be the same as this week. Obviously, all the beginning of my calls will be a trade recap of whatever happened throughout the day or whatever I took or whatever it was. But I don't want to be trying to do the same calls every week, so I might do a psychology call. I'll do something different. I'll figure it out. But I appreciate y'all for hopping on, and let's get it familiar. Let's go.